Hey guys, what's up? Stock Retail coming back to you on this wild Wednesday. A lot to talk about today. Certainly some big news to talk about today. Let's say that. Not necessarily a lot of news, but some big news. So we're going to talk through that. I'm going to be real about where I'm at today. No sense pretending or dishing out hopium. I think those who followed me for a minute know this is kind of more of a I don't know, like a DD kind of a channel, a keep it real channel, a non hopium channel. So it is a positive channel too. So if you're a short or a troll and you came here looking for some negativity, you're not going to find that here today. But if you're an ape and you want to find some folks who want to keep it real, you are going to find some of that today. So we'll talk through that. But I also want to just make sense of today. What the heck happened? And does it make sense? Can we logically explain this? Or can we poke holes and question it as well? So let's just kind of jump in. I think before I do, I just want to acknowledge, I mentioned keeping it real. What I'm really talking about is feelings here. Like, it is not pleasant to see one's investment going effectively the wrong way. It's not pleasant to feel like there are significant powers at play who are acting against us. Um, it's not pleasant to feel like there is rampant greed, fraud, and corruption in our markets, and that the people who most deserve to be taken care of are the people who are kind of under attack. Like, that's how I feel. That's who I am. That's who you are. That's who the apes are. But on the other hand, I also feel like I can accept that fate and accept sort of the, I don't know, negative view of the world and the negative view of who is in power and who has the ability to win this pitched battle, basically. I can just roll over and accept that, or I can say, no, I don't think so. I'm going to stand, I'm going to stay here, which is the whole, if you've ever tweeted or been on Facebook or YouTube or whatever and you use the hashtag apes not leaving and apes together strong, at some point it has to mean something. So for me, it does. It means something. I am apes not leaving, and I do believe we are apes together strong. And what is being waged against us, go back and check out a video I did pretty recently. Look at something called, can the manipulator move the informed investor? I think that's really important that you understand the war effectively, financial, psychological, sociological, the war being waged against us. Yes, those are strong words. I understand that. Go watch that video. That is not just conspiracy theory. That is academic research I share from the SEC's website. That is Chair Gensler himself in a former life when he was an MIT professor. I share some things from that kind of help inform what it is we're up against. Because of all that, for myself, for my children, for you, for future generations, I am apes not leaving. That does not mean today was easy. It was not. I did not like today. It's frustrating. So I just want to acknowledge that right off the bat, that is okay to have those feelings, right? We're not robots. There's a lot of bots who come up against us, especially if you're on some of the social media sites. You've seen that. So I guess a little play on words there, but we are not bots. We are real people with real feelings, and we don't like what's happening. But I guess I'm just saying, fork in the road. You don't like what's happening, so you take your ball and go home and allow the frauds to win, or you don't like what's happening, so you dig your heels in and you push back. That's going to be me. I'm going to be that second one. So let's just go and make sense of this. Let's get to some facts. That's what this channel is usually a little more about. What I want to just walk through is straight up math. What should the shares have done today? And can we make sense of this? Or does it start to point again to some of the problems going on? And if it doesn't logically make sense, is it perhaps a coil being sprung? Is there perhaps, kind of still some squeeze in it, whatever? So I think the first thing, we get trolled hard on dilution. I've talked a lot on this channel about dilution versus value creation. So let's just actually straight up acknowledge the dilution. Let's take this head on. Let's look at this. This morning we saw the announcement, 40 million shares, right? Now, first of all, let's even just set aside any disbelief and enter some kind of make-believe world. We already knew there was 25 million shares, right? When we went to the reverse split and the conversion, it was already going to be 25 million shares. So really today's announcement, if you think in terms of how the financial world would normally think about it, you'd look at an increment or an incremental change, or they might call it the delta. Today's delta was 15 million shares. It wasn't 40. This was not an additional 40 to my knowledge. This was the 25 becoming 40. So right off the bat there, I'm going to show you math that treats this 40 like it's some brand new thing. But honestly, what I should have probably done is treat it like an additional 15. In theory, the market had already priced in dilution of these 25 million shares. So, but let's even say for a minute, and by the way, what I'm going to share with you, I'm saying very facetiously, I don't believe this is how things should work, but let's just follow this, just to at least math this out. Let's just say the market says, oh, hey, there's 40 million shares, so I need to adjust the price of all of the existing shares to keep the market cap the same. If you don't know, market cap is effectively the size that the entire market believes a company is. If you look at a Nike or a Target or a Walmart or an Amazon, whomever, AMC, you can take the share price times all the shares that are out there, and that adds up to some total number that is the market capitalization, the market cap. It's basically a measure of the size of a company, its total worth in the stock market. So yesterday when we closed, it says Monday here, apologies, that should say Tuesday. But yesterday when we closed, we were at 1364. That market cap was a little less than 2.2 billion. Now, historically, before the reverse split and all that, our market cap was well over 4, and there were days in the past where it was way, way higher than that. So also that right there should start to tip you off, like why suddenly is the entire company, the market cap effectively cut in half since before the split. You cannot tell me that's because of the split. We're talking market cap here. We're talking the size of the company. It didn't lose revenue lately. It gained it, right? But why would the company as a whole be worth less? You can talk dilution all day long, but dilution is just spreading an existing market cap across more shares, which is what we're going to math out here. That is not a change to the market cap. It's not a change to the underlying fundamentals of the business. And you need to really wrap your head around that stuff so that you are kind of the anti-troll or the anti-FUD. You cannot be lied to if you understand these concepts. All right, so we had shares of 158.4 million yesterday. At the close, and that was that market cap of 2.16 at a price of 1364. So we get the 40 million announcement. All right, well, that's 25% dilution. So in theory, that should move the price down to 1089. Well, what would that be? So notice that market cap stays the same here. So we're effectively saying, yeah, there's more shares, but that doesn't mean the company suddenly has less business, new expenses, new problems, less properties, or that we suddenly have amnesia and we forget that the Taylor Swift announcement happened, right? All of that carried from yesterday to today. It's not like the market suddenly has a completely different view of this company. That's not how markets work. Let me say that again. That is not how markets work, right? So do not be gaslighted into that. So in theory, what should have happened, it's straight up math, guys. It's very simple. There's more shares, but the same pie. The total size of the pie. I did a whole video on dilution for you, 9 months ago or something. The whole size of the pie should not have changed. So let's look at that. This market cap of 2.16 billion. Now we've added, notice at the bottom here, we've added those 40 million shares. So the new price should have taken it down by 275. So that's that 1089 we should land on. We should have landed on 1089 if you just go straight up dilution. But what have I said on this channel so many times? There's no such thing as just straight up dilution. That brings in cash to the company, and you use that cash to create value. So let's look at the next step. Just the cash. Let's say Adam does not use the cash wisely. He doesn't do anything with it. He just stuffs it in the dirt and sits on it. Well, that still brings in cash. If they sell those 40 million shares, and I'm saying here, what if they sold them at 877? Now, remember, this morning when it was announced, the price was higher. For quite a while, the price was higher. So I'm not at all suggesting they sold these 40 million shares today. But let's just say, what if, for math's sake, say they sold these 40 million shares at an average price of 877, just for scenario's sake. That's the only reason I'm using that number. Let's say, like I said, some sold in the 10s and some in the 9s, and then some when we were a little lower than that today. Let's just say the average comes out to 877. That brings you basically to $351 million of cash they would have brought in. Well, that cash is part of the company. So when you think about that market cap, that value of the whole company, it's now sitting on $351 million more of cash. So you have to think about, okay, yes, we added 40 million shares, but we also, keyword also, add $350 million of cash. Any financial analyst, any investor, anywhere throughout the history of man would not turn a blind eye to $350 million of cash. That has been added to the company and thus must be reflected in the stock. If you have all things equal, right, from yesterday to today, what have you heard that's radically changed in the revenue model and the expense model of this company? Nothing is the answer. So if you add $350 million, that needs to be reflected in the stock. Well, what would that do? That $350 million gets added to the market cap. So can you see this first line here? We go from the 2.16, should become 2.51. We've added this cash to the company. Keeping those 40 million shares we've added, right? So now we're at that 198 still. I'm going kind of left to right. That 351 divided into all of now the existing 198 million shares should have added another $1.77 back. This is why I always tell you, don't let anybody just talk to you about dilution. Talk about value creation, because the next step is the dilution itself creates something. It doesn't just add shares. It also, in this case, let's say, adds cash. So, all right, then we still would have gone down. You can see the final price then, reflecting the cash that's brought in, should have been $12.65. Okay, but that's not what we landed at, is it? We were way below that. So right off the bat, let me go back. It was not 40% dilution, right? We were down like 40% at one time today. It was 25% dilution. You could at least look me in the face, even if you're gaslighting me, and kind of say, oh, maybe the price should have gone down 25%. But then I'm going to counter you and say, well, hang on. They also brought in this cash. So then that should have kind of counteracted, right? The market, so there's this theory called the sort of efficient market theory. It goes by a couple other names too. And the idea is markets incorporate all known information on the fly and pretty much in real time. So the market itself, the combination of all of us and now all of these computers and algorithms and everything, is absolutely smart enough to have thought of this. You know, here I am, just a dude on the internet. I thought of this. I guarantee you the broader market understands when you dilute, you bring in cash, and should have reflected this in the price. That's how Wall Street is supposed to work. I'm just telling you right now, Wall Street is supposed to price in the future value of current actions. We can talk about the time value of money and a whole lot of other things someday, and I'll do that on this channel because I like to educate. But I'm just telling you, even if you take the absolute worst case, ridiculous scenario that we turn a blind eye to anything that this stock sale would create, any value it would bring into the company, it should not have gone down 40%. You're talking 25%. Then, again, you add this cash back in, now we're not down by anywhere near as much. But that's not even the end. What have I told you on this channel before? And if you're new here, I'll just repeat it for everybody so we're all on the same page. 8 out of the last 10 quarters. Go look this up in the financial filings. You do not need to trust me. You will find this. 8 out of the last 10 quarters. AMC has paid off debt at double-digit discounts. As high as, I think, 52%, and the lowest is somewhere around like 32%. The most recent, I think, was 34%. Don't quote me on that. It was either 32 or 34%. So I'm going to take the 34%. We have, again, 8 out of 10 quarters we've seen at or better than that. When they pay off debt, I've told you there's a whole video I made basically called The Pieces. Take a look at that. It described months ago how the banks would have a liquidity crisis and would gladly give a discount to pay off debt, because what do they get from AMC for that? Cash. What do the banks need right now? Cash. At a time when banks need cash, Adam has access to capital to give them cash, and they will gladly say, you know what, I want that cash so much, I'm going to give you a discount to pay off this debt a little early. That's what's going to be happening. And you might say, you could try to say I'm spreading hopium, except for I'm telling you that happened 8 out of the last 10 quarters. So there is a track record of past history that I am, just modeling out here. So let's say they pay off debt at a 34% discount. So what we're doing is we're taking this $350 million of cash, 351 basically, and we say, all right, we had that added in, so I'm just doing a walk for you of the price, right? We had this dilution that knocked it down. Cash comes in, should bring it back up. But then they don't just pay off $351 million of debt. They pay off effectively more like $532 million of debt. That other 181, we can't just turn a blind eye to it, and that's not how markets work. The markets would say, oh, great, you brought in the cash, and you actually paid off a total of $532 million of debt, so your company now is $532 million to the better. By the way, if I wanted to really do this right, I just mentioned the time value of money. You would model out the future interest payments that you save on all that. What you would do is you'd say, like, some of this debt is due in 24 and then 25, 26, 26, it goes out to 2029. Whatever debt you pay off, let's say it was the stuff due in 2026, the bonds. Let's just say that's at like, I don't know, 8% interest. Some of it's at 10, 11, 12, it's all over the place. Whatever interest rate you want to choose. You take that $532 million, and you'd say, all right, figure out the interest payments per year that AMC is going to pay, and you'd run that out for the next, however many years that is. Let's say those 3 years or something. That's money that gets added back to earnings, and you basically add that all back in now to the stock, and that gets into this time value of money factor and a lot of other stuff. There's something called the current value of future cash flows. What I'm saying to you, sorry for getting a little wonky there, let's go through it step by step. We had a price yesterday. We diluted. Well, even if you want to say it all diluted, which that's a whole other thing, right? We know it didn't all just go into the market all at once. Don't even know if it's begun yet. We're going to get announcements. But let's just pretend it did. That would have been 25%, not some 40% drop. That would have brought in cash. That would have pushed the stock back up a little bit. I anticipate, this is me, this is not a fact, this is past history and then forecasting out forward. It's a forward-looking statement, means it's not fact, it's a point of view. But let's say 8 out of the last 10 quarters is some predictor of the future. They pay off at a 34% discount. That would push the stock back up. What does that do? That brings the market cap to 2.69. On those 198 million shares, that should add another 91 cents. Shoot, I didn't update this here. I'll do that for you on the fly. We're going to add that back in. I believe it's like 1357. 12 plus. There's some rounding as well. Yeah, with rounding, this was, so let's just fix that in case anybody wants to screenshot this. Okay. Sorry, guys. But we're all human. I'm sure this is riveting video here. I just don't feel like going back and refilming it all. Almost there. Slow computer. Okay. I'm going to call that 1357. We're going to go back into presentation mode. Hang with me. All right, so what that would have done is really, if the markets understand 8 out of the last 10 quarters or some kind of predictor of the future, and whether any of these scenarios you want to go with straight up dilution, we still should not have dropped as much as we did. You want to say dilution plus bringing in the cash expected from those shares, then we definitely shouldn't have dropped as much as we did. And then if you want to factor in, hey, I'm pretty sure he's going to pay off debt or make some great investment with it, then we really should have only dropped 7 cents. All right, so this is where I keep telling you, don't forget about value creation. It's not just straight up dilution. So that tells me, and especially that hard drop immediately today within seconds, that's just an algorithm. And then if you looked yesterday, some of you sharp eyes caught, there were 2 glitches in after hours that both magically happened to be, I don't know, like somewhere in the low tens. I don't recall at the moment. I've just been very busy, but I saw some of those flying across my screen on Twitter. Go back and look. There's like 2 glitch candles basically yesterday in after hours that both were into the low tens. That told the algorithm here, drop here, effectively, is what some apes believe. And I buy it. So basically here, if you price with only dilution, you'd be at 1089. If you price with dilution plus cash, the stock should have been at 1265. And then if you add back in, and there's the right number, if you add back in the future debt discount that would add value to the company, cleans up the balance sheet, all of that, in theory, we should have been almost flat to yesterday, even with dilution. This is what I've been telling you. But now you're flat on your stock price, but you're a much healthier company. You've just gotten rid of $500 million of debt in this scenario. I don't have to tell you how fantastic that would be if we've wiped out $500 million of debt and in walks Taylor next quarter. Right? So this is why many of us do not believe Wall Street is accurately reflecting the value of this stock. I don't think you can make a good argument that in the last 3 weeks or so that somehow the company's fundamentals have shifted so radically that like 3/4 of its market valuation should just be wiped off of paper. And I say paper, right? That's not reality. This is on paper. Meanwhile, the company's still bringing in money day after day and just announced the Taylor Swift partnership. And I suppose I'm remembering I didn't finish that thought earlier. You could even have one more line here that prices in the future value of those interest payment savings, because those are going to add quarter by quarter by quarter. They add to earnings. Any expenses you remove go straight to the bottom line. Your earnings improve by that much. So in theory, then, I've told you before on this channel, in our industry, the Wall Street tends to price in 15 to 20 years of earnings. So let's say your interest rate savings are, I don't know, I'll make this up, $40 million a year. Well, now price in 15 years of that. That's another $600 million or whatever that we should be adding to the market cap. So then the stock would actually have gone up. Yes, I said that, up. And this is straight up normal financial math. This isn't even calculus or algebra. This is just multiplication and addition. All right, I wanted you to understand that. If you want to just look at this later, digest it, basically nothing about today's price action makes sense to me. So therefore, I just ask myself, is this effectively high frequency trading again, wash sales, all of that stuff? Go back to the other video about the manipulator and the video about the FTDs. It's not conspiracy theory. There's academic research I share with you. The SEC's comments itself. Gary Gensler, when he was an MIT professor, talking about this. Look at the volume today. You as an ape, did you wake up and just sell all your shares and then buy back in and then sell again and then buy, look at the volume. Even if you want to say they sold all 40 million shares, which we know they didn't, this volume is not easily explained today. Sure, there could be day traders. I get all of that. But I believe there's something else creating this volume, and it's effectively driving algorithms. And it's high frequency nanosecond trading and wash sales, passing shares back and forth to drive the price down, along with short ladder attacks and all kinds of other manipulation. Meantime, some of you, I'm going to fly by this 10 seconds, I promise, but I want to remind us, it does not make sense to look at stock market manipulation and the regulators who ignore it and point the finger at a business operator. Right? It's Wall Street stock market manipulation. It's political regulatory body, negligence. I'm not pointing the finger at a business operator for that. Don't get it twisted. Okay, let's turn our eyes to some more positive goings on. Yesterday, I did the Taylor Swift forecast. And darn it if I'm not already feeling like that might be too low. And some of you replied that way. So, kudos to some of you if you end up being right. Yesterday, I showed you opening weekend, a few screenshots of ticket sales. We had some conversation around comparing that to 4 different movies. We compared it to Barbie, Little Mermaid, Spider-Man No Way Home, and Star Wars Force Awakens for various reasons. Covered that in the video yesterday if you want to go in detail. Won't bore you with that today. But I also looked 3 weeks out, at the 3rd weekend. And we were seeing in multiple cities near sellouts, and in some cases sellouts, in the 3rd weekend. And that mattered because we were talking about how big can this thing be. And so in movies, you talk about, what kind of legs does it have? Here is the 4th weekend. Okay, I just pulled this up right before I'm making this video. Here's a theater in Seattle. Actually, that is kind of fun because that's the one I went and saw when Adam came and did one of his movie showings. He did that in Seattle. That's about a 3.5 hour drive for me. So my wife and I went up there. South Center, that's the one we went to, if memory serves. I hope I got that right. Believe that's the theater we were at. So there's Seattle. Okay, it's not sold out, but this is the 4th weekend, guys. And this is in the middle of November. We're 2 months out. You don't think in the next 2 months a few more of those seats are going to sell? And it's the 4th weekend in, and it's already looking like that? What is this? This is Saturday at noon. You can kind of see at the top of each of these. Here's another. I did St. Louis yesterday. Here's St. Louis again, Saturday the 4th at 7 p.m. 4th weekend. Looks about like 60% full, maybe 70. All that's left is the front 3 rows, and not even all of those. Here's, I don't know if I pronounce this right, guys. Sorry. Aventura, Florida. Okay, yeah, not sold out by any means, but again, 4th weekend, 2 months away, plenty of time for more tickets to sell. People are already filling out the middle of this. Good luck getting middle seats. You're not going to. Here's Leawood, Kansas, chosen for obvious reasons. That looks about 60-70% capacity. That's fourth weekend in. This thing is going to be big. So let's revisit the numbers from yesterday, and we'll just jump right to the bottom line. So I've already brought these up. If you watched yesterday and you're an eagle eye, you'll notice these numbers are different because I'm just continuing to be a little bit blown away by how big this is. And I'm just going to be honest, there's a chance we could beat these numbers. I don't want to spread hopium, so I'm trying to keep these reasonable in terms of a forecast. I'm now looking, so if you call this the expected case, perhaps beating $100 million for the opening weekend, and then the total across, remember these are only showing on weekends, these are not weekdays, total showing across all the weekends in Q4, maybe 282 million. And I told you yesterday, if we reach kind of into the high 400s, kind of shifted that around a little bit, but effectively Taylor herself could flip AMC back to profits in Q4. We hit profits in Q2. I believe we're going to see profits in Q3. You guys know that's my point of view. Q4 did not look like we were going to hit profits. Now there's a puncher's chance, at least, if you Swifties go crazy and keep coming back and getting friends to go and getting dads to go and whatever, moms, maybe we start looking at profits. I'm not ready to say that, but I'm just saying it is out there, which shows up here. So yesterday I said I thought it would contribute about $151 million to AMC. I've changed that number. Now you're wondering probably, hey, wait, retail, your top line numbers went up. How come the bottom line kind of went down? Just tweaked a few things in terms of the actual cut AMC gets, in particular the cut when it's showing at their competitors. I saw a news article today that thought it was smaller than the number I used, so I did bring that down. That's really the main impact there. In fact, that's kind of the only impact. Everything else went up. And I think we're all still figuring this out. I thought I was pretty clear in the video yesterday that, there was some humility in that forecast in terms of I might be wrong on a few things. There was an ape, if you're watching this, you know who you are, who had a respectful disagreement. We argued a little bit, but I mean, hey, we're all trying to get to the right numbers. That's okay. And so they had a different point of view on a couple of like the percentages and how that was going to break down and all of that. So kind of tried to reflect some of that here. So if you're listening, just want you to know, we might have argued, but I listened to you too. So it's good. Apes sharpen each other. So that's why some of the numbers have changed, but still amazing. Like basically look at these numbers here and then just pretend in your mind that this had never happened. It was a pretty big deal if we didn't have this. Like this is contributing some significant numbers next quarter. And then total revenue in that high-end case is somewhere around 200 million for AMC, and that's where I'm saying it starts to move us towards profits and all of that. And, I'm not forecasting profits. Please don't hear me wrong. I'm just saying they could be in play if the team's able to really squeeze some things, or there's, on the expense side, or maybe there's some movies that surprise us, like Marvels and Wonka. There's some big movies still in the quarter, or maybe there's a couple movies I don't know about, that kind of stuff. We could see a good quarter. So, almost done here. One more slide after this. Just want to drop a new breadcrumb. There is a couple wrinkle brain apes out there who share information with me from time to time, and I got to tell you, I don't always digest it right away. This is one I am still just learning. But I'm sharing this because you out there, we are a group of a couple million detectives. And so nothing gets by us is my point of view. So if you want to start doing some DD, start digging, I'm calling it a breadcrumb because I'm not going to talk a lot about the things I'm learning here because I'm just not an expert enough yet to even talk about it. But I want to just share with you, this is something worth looking at. Notice this cross-asset sales and trading. Notice the name B. Riley. That name should have been popping up for you lately in terms of price predictions, price targets. And then they showed up as one of the players today in that 40 million share sale, right? So this notion of cross-asset sales and trading, event-driven, distressed, special situation investments, a whole lot of things here. Equity and fixed income, so that's, stocks and bonds. Just all I'm going to say right now is I think this might be worth scratching at and learning more. That's what I'm going to be doing. I'm going to be learning more here, and I recommend you do. And Shorty, go ahead and tell your henchmen and tell your pit bosses that we will be digging on this. So good luck on that. All right, finally, here's the grounding for me as I think through the emotion of the day, the frustration of the day, the frustration of a few weeks, our price not being where we want it to be, us still wondering when Lambo and when life change, all that kind of stuff. This is our industry. If you've been around, I've shown you this before. This is a week by week view, so you can see through, I don't know, not quite 3/4 of the year, a little closer to 2/3 than 3/4. We're kind of between that. But anyway, through the end of August, effectively, very early September, we are getting close, sniffing being $1.5 billion ahead of the box office from last year to this year. I'm going to remind you, and you can even just see there's lines that go down here. Somebody once said, well, this is a running total, so it can only go up. No, that's not true. This is comparing the same point in time this year versus last year. And so if we were, say, the box office had been smaller, we'd be somewhere down here below zero. When the box office is bigger, that's when it adds. And so you can see Barbie and Oppenheimer started. We went up, and then we had a few other good summer movies, because you can see Barbie and Oppenheimer started to level off right about here, but we started adding, Teenage Mutant Ninja Turtles, Haunted Mansion, and a few others that have been coming out, Gran Turismo, etc., etc. So this is our industry. This is your year-over-year view. Just in your mind, line up the stock price next to this. You're invested in an industry that looks like this. Your stock price move in the same direction? No? That sound normal to you? Hopefully the answer is no for you. Keep digging. Keep not being gaslighted. Keep asking questions. Just simply, and make it simple. Just go, this is the industry I'm invested in. This is the domestic box office. And when this goes up, more people come. And those people are buying record numbers of food and beverage. I know this because I've seen this in the financial results, right? You're saying this to yourself. Why isn't the stock price moving accordingly to the industry that I'm invested in? That's worth asking. But what's great is somebody's coming along, Shorty, who says, I'll write your name. Let's go.